Hello, good afternoon. Welcome to another episode of this YouTube channel. Okay, this afternoon we are going to discuss about the revised Corporation Code of the Philippines. Now, these are the amendments or the changes made with the Corporation Code. So beforehand we have discussed the old Corporation Code, Batas Pambansa bilang 68, and now we are going to discuss about the changes made in the old Corporation Code. Okay. So let me share my screen with you. Okay, the revised corporation code. Okay, the revised corporation code of the Philippines took effect on February 23, 2019, following its publication in two newspapers of general circulation. It's Manila Bulletin and Business Mirror. So the revised corporation code brought about the changes in the old corporation code. This is covered by Republic Act 11232 or the revised corporation code or RCC, as will be used in this discussion. Now we are going to discuss the prominent changes or the highlights only of the RCC, no? The revised corporation code. Okay. Now, number one, organization of corporations. The revised corporation code removed the absolute requirement of having a minimum of 5 individuals in the formation of corporations. Now, class, the classic distinctions between sole proprietor, a partnership, and a corporation is with respect to the number of persons or organization of persons. Now, beforehand, before the RCC or the Revised Corporation Code, our distinction, the classic distinction is that a sole proprietor would have one person or one owner, no? A partnership is 2 or more persons, while a corporation has a minimum of 5 incorporators. Now, that is no longer true. Under the revised corporation code, no, the absolute requirement of having 5 minimum individuals was changed or altogether deleted. Now, the law now allows the establishment of one-person corporation, which is composed of a single shareholder who may be a natural person, a trust, or an estate. Now, class, no, I would like to emphasize this one that under the old corporation code, Batas Pambansa bilang 68, actually, there is already a form of one-person corporation. But under the old corporation code, it was called as what? A sole corporation. Now, we have discussed this under the old corporation code. No, a sole corporation is where the priest, the pastor, the imam, or the rabbi will have to incorporate as a sole proprietor for the purpose of administration of the property of their churches or their respective churches. So it is not true that under the old corporation code, there is no one-person corporation. There is one-person corporation, but that is in the form of a sole corporation. No? Sole corporation, just like a priest, pastor, rabbi, or imam, as the case may be. Now, under the revised corporation code, no, it was there is an establishment of one-person corporation which is composed of a single shareholder. In this case, class, the law extends the sole corporation to all types of businesses, not only limited to the priest, pastor, rabbi, or imam. Now, there is a one-person corporation or OPC, no, who may be a natural person, trust, or an estate. No? This OPC may acquire all the stocks of an ordinary stock and apply for the conversion thereof into an OPC. Now, class, lahat class ng shareholders of the stocks of an ordinary stock corporation can apply for the conversion in an OPC. Okay? Okay. Now, class, A shareholder may acquire all the stocks of an ordinary stock corporation and apply for the conversion thereof into an OPC. Now, since in OPC, there is only a single shareholder, no, the bylaws is no longer required. You remember that the bylaws is only intended for the purpose of the, for example, the meeting, setting the meeting, no, how notices are forwarded to the board of directors. Now, since there is no board of directors because there is only a single shareholder, then the bylaws would no longer be of use, which is why it is not required as insofar as OPCs are concerned. However, there are certain businesses which are not allowed to be incorporated as OPC. Now, these are the businesses which are not allowed by law to be registered or incorporated as OPC. What are they? Now, banks and quasi-banks, pre-need trust insurance company, public and publicly listed companies, non-chartered, government-owned, and controlled corporations. So these are the companies which are not allowed to incorporate as OPC. Now, okay. As defined, it appears that a juridical entity, just like a corporation, may not be the stockholder of OPC, because you have here the definition of what OPC. Now, it is composed of a single shareholder who may be a natural person, a trust, or an estate, to the exclusion of a corporation. So as defined, a corporation may not be registered as an OPC because a corporation is a juridical entity as opposed to a natural person, no, as defined by the revised corporation code. Okay. Now it requires the single stockholder to prove that the OPC is sufficiently financed and its assets are independent from his property, no, in order to claim limited liability. Otherwise, he shall be jointly and severally liable for the liabilities of the OPC. Now, class, the OPC is required to prove that there are assets registered under the OPC and that these assets are not commingled with the assets of the shareholder. No? Otherwise, if the OPC will fail in this respect, then the OPC and the single shareholder will be what? Solidarity liable for all the liabilities of the OPC. Now, unlike a sole proprietorship, an OPC will have a juridical personality separate from the individual stockholder. This is the feature of an OPC being a corporate or a corporation or a juridical personality. The separate juridical personality of the OPC is not extinguished, therefore, upon the death of the stockholder. To ensure continuity of the corporation, what happens is that the single stockholder is required to designate a nominee and an alternative nominee who will manage the corporate affairs once the stockholder dies or becomes incapacitated. Okay. Now, this is actually the mechanism under the OPC for its continuity, because the OPC would be constituted by a single stockholder. In case the stockholder dies, then he will be replaced by what? The nominee and the alternate nominee designated by the single stockholder to manage the corporate affairs. No? Okay. Now, the nominee and the alternate nominee will be holding the position in a holdover capacity until after the legal heirs of the single stockholder have been determined and that the heirs have designated or agreed as to who will be the next single stockholder. So this will be in the form of settlement of estate. No, after a person dies, there will be settlement of estate of the OPC. No, the heirs will have to decide for themselves who will be appointed as the next OPC. In which case, in the meantime, the nominee or the alternate nominee will have to manage the affairs of the corporation pending settlement of the estate of the deceased OPC. Okay. Now, For tax purposes, though, an OPC would be subject to corporate tax rate, no, the corporate tax rate, currently at the flat regular income tax of 30%. In addition, an OPC's dividend distribution to the single stockholder shall be subject to the 10% final tax on dividends payable to individuals. Okay. Now, okay, the minimum subscription and paid up, we have emphasized this during our discussion under the Old Corporation Code or Batas Pambansa bilang 68. We said that under Section 13, there is a so-called 25-25 threshold amount. That 25% of the authorized capital stock must be subscribed and at least 25% of the subscription must be paid. Okay. Now, this requirement for incorporation was deleted in its entirety under the RCC. Now, however, although there is no minimum subscription and paid up for the corporations which are to be registered under the RCC, no, the law requires that the minimum paid up capital shall not be lower than 5,000 pesos. Meaning to say that the minimum paid up capital must be at least 5,000 pesos. No, 5,000 pesos. So although there is no minimum paid up, this is the lowest that the law requires. Okay. Take note, class, however, that the 25-25 threshold requirement was retained for the increase of the authorized capital stock. Although it is not a requirement upon incorporation, it is still required for the increase of the authorized capital stock. And take note, during our discussion under the old corporation code, the basis for the 25-25 threshold amount is what? The amount increased, not the amount as increased. So kung idadagdag ninyo sa authorized capital stock is 500,000 from the original authorized capital stock of 1 million, then the 25 paid up capital will be computed on the basis of the 500,000 and not with the original 1 million authorized capital shares or capital stock. Okay. The corporate term, no, the corporate term limit of 50 years has been removed such that a corporation can now enjoy a perpetual existence unless expressly limited by its articles of incorporation. So any and all corporations to be registered upon the effectivity of the RCC will now be in perpetuity, no? Perpetual corporate existence. Ibig sabihin, no limits will be imposed unless, of course, the articles of incorporation expressly provides otherwise. That goes without saying that in case that the articles of incorporation is silent on the corporate term, then it is deemed to be perpetual in existence. Okay. Now, such perpetual corporate term shall also apply to corporations incorporated or registered prior to the RCC, unless said corporations elect to retain a specific corporate term. Now, what do we mean by the second bullet? The second bullet means that all corporations which are existing at the time that the RCC took effect will now enjoy its perpetual existence. They also would enjoy perpetual existence. This is the retroactive application of the law. Meaning to say that since the effectivity of the law, no, in February 28, 2019, it will retroact. It will apply backward. It will apply to all existing corporations. No, they are now be enjoying the perpetual corporate term unless, of course, the articles of incorporation would provide otherwise. Okay? Now, in case that a corporation or a corporate term has already expired, no, you can file a petition for revival of corporation with the Securities and Exchange Commission or the SEC. Now, what do we mean by petition for revival of corporation? Now, this is what the other authors would describe as the Lazarus provision of the RCC. When you say Lazarus, or Lazaro, no, this is where the dead corporations was resurrected, no, by the enactment of the RCC. In other words, class, all these dead corporations, dead quote to quote, meaning to say their corporate term has expired, can now be resurrected by the filing of a petition for revival of corporation. Just take note that in case a dead corporation or a corporation whose term has expired, no, after it has been granted revival by the SEC, will be subjected to all liabilities, to all obligations, to all duties and debts existing prior to its revival. In other words, class, there will be revival not only of the corporate term, but also all of the liabilities of such corporation that have existed prior to its revival. Okay. Okay. Now, no, if the SEC approves the petition for revival, then the corporation will now have a perpetual existence unless the petition in itself would provide for another or a contrary provision, meaning to say it will not be specifying, or it will specify a specific period of time by which the corporation will have to exist. Okay. Now, class, under the Old Corporation Code or Batas Pambansa bilang 68, no, an incorporator must be a natural person. No, tandaan niyan, class, who must be of legal age, class. Okay? Now, under the RCC, a partnership, association, or a corporation can now be an incorporator. This is under Section 10. Take note of this important development under the RCC. A partnership, association, or a corporation can now be an incorporator. You remember during our discussion that under the old corporation code, the law does not allow a corporation to be an incorporator, no, because according to the wisdom of the law, it will be hard for a corporation to be formed if there will be an incorporator, no, at the inception or formation or the foundation of the corporation, because well, the framers of the old corporation code deem it wise that it will be more convenient and more expedient for the incorporators to form a corporation if they will be dealing with individual persons or natural persons and not to another board of directors. Okay, but now the law allows the formation of a corporation by a partnership, association, or another corporation. Take note and take note. Now, okay, in case of non-operation of the corporation, or in case that it has not commenced its operation, no, from its incorporation, the only changes made here is that if the corporation has not operated or has not transacted its business, no, under the old corporation code for 2 years, then the license of the corporation can be revoked. So under the RCC, it was increased to 5 years, meaning to say the law allows the corporation a longer period of time before its license can be revoked on the ground of non-operation of its business. On the other hand, if a corporation commences operation but subsequently becomes inoperative for 5 consecutive years, the corporation may be declared as delinquent. So class, and in the second bullet, what has been added here is the word consecutive, no? Consecutive years, 5 consecutive years. The inoperation must be in a 5 consecutive years and not aggregate years before it can be declared as delinquent. Okay. Now, class, with the introduction of the OPC, the minimum number of directors required to incorporate is reduced from 5 to 1. Okay, but the maximum of 15, no, is retained by the law. For trustees, however, the RCC has removed the maximum number which can be elected. So if it is a non-stock corporation, then there is no more limitation with respect to the number of the board of trustees. Okay, under the old corporation code, you remember that majority of the board of directors are required to be residents of the Philippines. Under the RCC, this requirement has been deleted or removed. No, so as it stands today, no, there is no more requirement of residency under the RCC. No, okay. And then the term of trustees is extended from 1 year to 2 years. Okay. But take note that the law now expressly requires that the treasurer be a resident of the Philippines. This is what the law provides. It is before kasi under the old corporation code, no, hindi nakalagay, hindi malinaw kung required ang treasurer to be a resident of the Philippines. Now it is expressly required by law. Although majority of them is no longer required to be what? Resident of the Philippines. Okay. Now, under Section 35 of the RCC, Section 35 will have to deal with the powers or the express powers of the corporation class. Okay? Or the general powers of the corporation. Now, magtataka kayo under the old corporation code, the general powers of the corporation is under Section 36. However, no, it was now moved to Section 35 because Section 13 was deleted in its entirety. Section 13, again, is the 25-25 threshold amount. So the general powers of the corporation is now found under Section 35 of the RCC. Now, there is an additional power granted to corporations, which is the power to enter into a partnership, joint venture, another commercial agreement with a natural person or another corporation. So take note, class, that a corporation can now be a partner in a partnership. Tandaan nyo yan. Okay. Now, for domestic corporations, no, before kasi, hindi sila ina-allow or there is no express provision to deal with donations to political party. Now, for domestic corporations, no, they are now allowed to donate to a political party or a candidate in an election for purposes of partisan political activity. Domestic corporation can now donate, no, some funds in favor of a political candidate. Okay. Corporate books. Tandaan nyo, class, that if the paid up capital of the corporation is less than 600,000, then the financial statement may be certified under oath by the president and the treasurer and need not be certified by an independent certified public accountant. So this goes without saying that if the paid up capital of the corporation is 600,000 or more, or at least 600,000, then it needs to be certified by an independent certified public accountant under Section 74. So take note lang, class, that under Section 163, there is a criminal provision imposed against an independent independent auditor. Okay? Now, if the independent auditor, no, is found guilty of collusion or conspiracy with the corporation's directors or representatives, no, or if the independent auditor certifies the corporation's financial statements despite its incompleteness or inaccuracy, or there was failure to give a fair and accurate presentation of the corporation's condition, or if it contains false and misleading statements, you will be held liable to pay a fine or multa ranging from 80,000 pesos to 500,000 pesos. Diba? Ang laki class. Now, there is an aggravating circumstance here that in case that the fraudulent report or certification given by the independent auditor has the effect of causing injury to the general public, then the responsible officer and the auditor will be liable to pay a higher fine, which is 100,000 to 600,000 pesos fine. Okay. Now, lastly, there is now through the advancement of technology, the board of directors is allowed to meet or to vote cast in absentia via remote communication method. So inaalaw na yung electronic meeting. No? The SEC is further mandated to implement electronic filing and monitoring system, etc., etc. Okay. So this ends our discussion on the revised corporation code. I hope you learned something, and see you again to the discussion of in this YouTube channel. Wait for the uploading of my presentation on the law on obligations and contracts. See you there. Thank you.